Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that clearly focuses on the biggest buzz on the day street. So today on the show, we are going to be focusing on from the secondary market space, one stock that you should definitely watch out for, and that is Shriram Finance. All through last week, there was a lot of anticipation, and towards the end of the last week, we finally saw how MUFG Bank was about to invest 39,618 crores to acquire 20% stake fully diluted in Shriram Finance. That kept the stock higher in trade. This week, we are looking at a lot of brokerage houses that have now started to look at Shriram Finance, get in another light, and are looking at a further upside onto this stock because of this new strategic deal that has taken place as well, and a definitive agreement therefore. So we will be focusing on that stock. We will also be focusing on the IPO space or the recently listed space as well. Why are we focusing on that? Because at least 16 companies are actually looking at a potential share unlocking that we are going to be seeing, and that's going to be keeping all this space buzzing. 16 company shares will unlock this week. A total value of share unlocking will be to the tune of 11,900 crores. Remember, the lock-in expiry increases the tradable supply of shares, and therefore we could see some of the pressure build on these 16 companies that have recently got listed into the stock exchanges. That's something we will be focusing on. And the third and the most important aspect that we have come out with today is focusing on the entire festive cheer, and that's with respect to the Santa rally that we are all expecting to take place. And finally, which are the Santa stocks that you should be looking at investing in right now so that you can enjoy a good amount of return when it comes to the Christmas next year as well. So 1 year perspective, all the Santa stocks that we will share from our top market master to you on this show as well. Let's quickly first welcome Prashanth Tapse from Mehta Equities to join in on the show to help us with a broad view on the markets and of course to focus on all these aspects. Prashanth, warm welcome to you. Good to have you with us this morning. And this entire week is starting off on a positive note yet again. We have 26,000 back on the screen. We have 26,135 right now. That means 167 points up as far as the Nifty is concerned. All the sectors are positive despite some uptick on the India VIX as well. How are you looking at momentum building on as the festive cheer gets into the air as well?
Good morning, Sakshi and the viewers. Obviously, yes, I think this weekend being a very small weekend, and even we have also the Christmas on the Thursday. So positive sentiments have started in the opening today, 150 point plus. I think the credit goes to the rupee, which has giving some kind of real positive push for Indian markets to trade on a very positive way. And even last week when we saw Japanese interest rate hike, post that there was a press conference by the governor, and I think they were not so hawkish with respect to the next calendar year interest rate hikes. So that was also giving some kind of push to the rupee to be on the benefit to Indian markets. So again, global markets very positive, and I think even today there are 2-3 meetings by Commerce Minister Mr. Piyush Goyal. I think some kind of positive sentiments can be coming for a Christmas gift for Indian markets. So overall, technically also I think 26,100 would be a resistance for Indian markets, which have opened already higher to that. And if you close above this, I think this week will trend towards the all-time high also again.
Okay, fair point. Let me now come to the key aspects that we are going to be focusing on. One is Shriram Finance, the big ticket deal that has taken place there, Prashant, last week. MUFG Bank to invest nearly 40,000 crores to acquire this 20% stake in Shriram Finance in a definitive agreement that was signed on December 19th. And of course, the capital infusion will be subject to regulatory approvals there. But brokerage houses have started to cover this now after the deal. Morgan Stanley has an overweight rating, a target price of 925. There we are also looking at others that are looking at it the stock positively. We have Jefferies that has a buy rating. It has raised the target price to 1,060 now from 880 earlier. We're also looking at Motilal Oswal on Shriram Finance with 1100 target price, again a rating of a buy, and Citi, which is given again an 1100 kind of a rating there, and a buy, 1100 target price and a buy rating there. So what all are they positive on? They're talking about capital infusion, structural positive. They're talking about the long-term fundamentals that will get a booster. They are talking about how loan growth could see an improvement. There could be flexibility. Cost of funds, however, is likely to fall, is what they are also saying. Credit rating upside is also possible. They truly believe that as well. Jefferies has clearly said that equity infusion in the book is value accretive. They're also looking at stronger position in the CV as well as the MSME lending because of this. And Motilal Oswal definitely believes that the deal is strategic and capital likely is going to be infused by FY27. Citi believes the tier 1 capital jumps to 33% and leverage drops to 3 times as well. So those are the positives that brokerage houses are penciling in. Prashanth, for an average investor, Shriram Finance, looking at this stage for somebody who's a long-term investor, what would you say?
I think very positive. This is a deal which will re-rate the sector as well as the stock. I think even on today's trading price, the valuation is at least 10 to 12% higher than what the market is trading today. So overall, very lucrative for the investors. And the way how Japanese are taking interest in Indian financial sector, we have seen Yes Bank a few quarters back. Even SSBC has tried to take some good stake in the Indian markets, and a lot of Japanese funds are getting into Indian markets as a long-term partner, so that gives some kind of very positive, startup strong support for Indian financial sector to MBFC for long term. Overall, the valuations are very much attractive even at this point of time. I think the way how other brokers have given the targets in line with that, again, I think 1,050 can be a very short-term target for me on the current levels, looking at the valuations. And I think that will take its own time, 3 to 6 months, to get these kind of approvals from all the regulators in India. But very positive. It's a great deal for India.
Okay. And the next portion that we are going to be focusing on is the IPO lock-in expiry and the big picture there. 16 companies' shares will unlock this week, viewers. The total value of shareholding, shares unlocking will be 11,900 crores. The lock-in expiry increases the supply of shares, and this could lead to stock-specific volatility. At least 10 of these 16 companies are already trading below the IPO price, and therefore one has to be more cautious whether there will be any more pressure on this. So let's try and understand what is going to be happening today. Today we are going to be seeing VMS TMT, iValue, Info Solutions International, Gemological Institute, as well as BLS E-Services see as their value unlocking. Tomorrow we are going to be seeing Satvik Green Energy, GK Energy as those companies that will see the value unlocking. Also on Wednesday, then we will also have Ganesh Consumer, D Development, Engineers, Atlanta Electricals. These will be the companies that will see share value unlocking. And on Friday, finally, we will see Solar World Energy Solutions, Sesha Sai Technologies, Sanatan Textiles, Jaro Institute, Concord Enviro Systems, Aris Infra Solutions, Anand Rathi Shares, and stock brokers also. So these are in all those 16 companies that will see the value share unlocking. So let's find out from Prashanth how to deal with all these companies. In case you already are holding some of these companies from the IPO time, what should your strategy be? So what usually happens, Prashanth? First explain that. What happens in this lock-in expiry? Why are we focusing on that?
So obviously, whenever an institutional investor comes into an IPO like an anchor, there is a period of 1 month, 3 months plus something like that, where they can have an option of exiting the stock if whatever the reasons are, making profits, or they want to continue or not to continue in the company as a fundamental thing. So I think a lot of companies which you mentioned the names, I think almost like 12 to 13 companies are almost trading below their issue price. So there can be lesser selling pressure, I think, because selling after waiting of so much after months, again selling at a loss, I don't think those things will be very good for the company or a fund. So I am expecting a very low volume in those stocks, but again trend is negative in those stocks. 1 or 2 companies like Anand Rathi, maybe one stock which can see some kind of meaningful downside because they're already in profits. So I think that can see some kind of more sell off. But overall, I think this will not have larger impact because already these stocks are trading down. If they are selling at this point of time, they are booking their losses on their books. So there may be some kind of wait and watch for those funds to again carry forward for a few more months and then think of selling it. So overall, I am not aggressive in terms of price correction, but yes, already the price have been corrected.
Okay, got that. Now, let me try and understand from you, from all these companies that we read out, which are going to be seeing share value unlocking this week, any companies that you still believe that even if the pressure is on just a couple of sessions as a knee-jerk reaction because of this share value unlocking, it is still okay to continue to hold them for the long term? Which are those companies that you would be probably comfortable with even now?
I think Anand Rathi and Sanatan Textiles, two stocks which we are also tracking it very aggressively, and fundamental things are still good in terms of earning visibility, and also I think these two stocks can be considered to continue to hold, and rest are depending on the market risk.
Okay, absolutely. And Anand Rathi today also is up by about 6% and continues to be a strong company and a strong, pedigree that we have been seeing also in the mutual fund business that was already listed a couple of years, which has already been a big wealth creator for investors. And even now on the stock broking front, seems like this is going to be positive. And now let's go to our top focus today, and that's far as looking at the Santa stocks are concerned. In case you too are trying to look at the new year as an opportunity for you to build a quality portfolio with quality stocks added onto your portfolio, which can actually give you handsome returns till the new year, that is the next year Christmas, over the next 1 year. Which are the Santa stocks that you should be looking at? That's what is a list that Prashanth has devised for all of you viewers on Business Today television. So let's start off by understanding which is the first stock that you would be looking at, Prashanth, for the new year. Is it from the large cap space that you're focusing on? Because this year entirely has been a safe space to look at the large cap space. Is that a space that you would continue to bet big on in the new year too?
I think yes, a little bit of large cap and mid cap, both mixed one. I have made some portfolio for the Santa rally, but again, obviously the majority of the portfolio should be focused on the large cap, where a lot of investors have missed in last 2-3 years because of high allocation to the mid cap and small cap. They are facing a drastic fall in their portfolio performance. So I think they should start allocating at least 30-40% of their portfolio in the large cap, and rest again mix of mid cap and small cap. So I have created a 5 stocks for this Christmas. I think I will start with Reliance Industries, the big boy of the industry. I think that has some kind of technical factors as well as fundamental reasons where the valuations are very much comfortable for me at this point of time, and downside is very limited from the current levels. If you see even the quarterly earnings of Q2, there have been some kind of better EBITDA margins which have been improved. So I think second half for Reliance would be better considering the oil prices, considering the chemical prices, and the other aspects with respect to the listing of Geo also. So I think comfortably downside is limited from the current levels, and the upside is at least a decent of having a target of 1625 for a medium term to long term.
Okay, fair point. So that's the first stock that you should be looking at, Reliance Industries. Of course, with a target price of 1625, a lot of opportunities there. Like you pointed out, I think the big trigger that everybody is waiting out is the Geo listing in the new year as well. That's something that everybody is keenly watching out for. Reliance for many years has been a core portfolio stock. Every mutual fund has an exposure to Reliance Industries. That's the kind of stability that the company has shown, of course, as the largest listed stock market stock, as well as the conglomerate that is such a big conglomerate that we've been looking at. It has slowly and gradually found its way and found its feet in the current year 2025. The beginning was a lot weak, but in the second half it finally picked up some more pace, and you do believe that in the new year this is going to be a clear stock that one should be looking at. Let's now talk about some of the other stocks that you've marked out for all our viewers. The second stock that you've marked is Ather Energy. In fact, I wanted to understand what is the reason why you've picked this for the new year, especially because this stock has already performed in its first year of operations. The company got listed very recently, and in fact it has been one of the best performing IPOs of 2025. So all those IPO investors have already seen a substantial gain. 136% kind of a gain is what you have already garnered. Why do you think that in the next year also this can have the potential upside to continue to perform, Prashanth?
I think very two reasons. One is the product quality. I think from the day one, way how management is trying to put their product engineering in place as per what market is needing, and whatever Ola has done in terms of their no mistakes in the last 1 year. These guys have learned that these are not mistakes, we should not do it. So I think they have tried to justify what the product is, quality, and again I think the way how market share has increased from a very much single digit to double digit, I think that is also one kind of very positive outlook for me. And with respect to financials, they are very much very increasing their decreasing their losses and trying to be profitable very soon. I think coming few years, 1 or 2 years, there will be continue to be very positive outlook on the stock. And with respect to product outlook and the management, I think very strong to have a very pure EV stock in your portfolio. Despite the traditional market bikers have two-wheelers have a good market share in the last 1 year, but again, if you want to compare Ola and Ather, I think Ather is the best stock to have in your portfolio.
Okay, got that. So there you have it. Ather Energy can continue to show you promise in its second year of operations in the stock markets as well, with a lot of opportunities there, and may continue to outperform in the electric two-wheeler space too. Let's try and understand the next stock. From the auto ancillary pack, you have a pick for us. Which one are you looking at, Prashanth, there?
I think CEAT should be the one stock one should focus more on. Again, fundamentally very strong company in terms of valuations, very comfortable to have a decent company with a price to book valuation of 2 plus P above 30. Again, very comfortable to have this kind of even technically that is giving a lot of support for an investors to add this stock in the portfolio for a decent long-term return. Again, at least for 4,400 for a medium term and 4,600 for the next 1 year. So this is one stock which was underperforming, and I think this will be performing for the next 1 year.
Okay, so CEAT from the tire space looks promising at this point in time. You could definitely be looking at buying the stock for a target of 4,400 to 4,600 rupees per share over the next 1 year, and that's where you could look to benefit from the current price uptick that Prashanth sees for all of you. Let's look at the next stock. The next sector that you've chosen for our viewers, Prashanth, is the FMEG space, the fast-moving electrical goods or the cables and the wires segment. What are you looking at here? What are the triggers that could be, promising as a sector, and which is the stock that you've chosen from this sector from here?
I think sector is really growing very fast. Every year, I think second half of the year is the strongest year for companies like this. So I am expecting a good margin improvement in these kind of sectors. So in this sector, again, fundamentally strong companies, Polycab with the market share of almost 11 lakh crore. I think that would be the one stock one should focus more on. With respect to valuations, very comfortable, the way how the ROCs and ROCs have improved. I think coming quarters, their margin improvement as well as the growth in the top line will feed some kind of good improvement in the price and the valuation as well. So I think very positive. I think technical factors also giving me a lot of positive tick from the current levels. With a target of at least a decent 800 rupees, 8,000 plus from the current levels, investors can look for medium term to long term.
Okay, fair point. So Polycab there, which you can buy with a target of 8,000 plus on the stock. I wanted to also bring up this aspect. Polycab has had a very volatile year of 2025. In the beginning of 2025, we'd seen a lot of volatility on this stock as well. In fact, the stock price had slipped to nearly half of its value with the kind of crash that we were witnessing. But slowly and gradually, it found its feet and it's back at 7,500 odd levels, 7,600 odd levels as well. Do you think all those volatilities that we had seen are a thing of the past, and the stock is fundamentally and technically best placed for the new year as well?
I think yes. We also know the reason why the top 2-3 conglomerates are trying to enter into this space. That means the industry has a good scope to grow. I think that is why the other players are coming into. But again, being a leader in this company, I think the market share is really strong and the quality is really strong from the current levels. Overall, the ratios are speaking a lot of things for a fundamental strong company.
Okay, fair point. So there, you do see Polycab best place when it comes to the new year as well, and that's where you could probably see 8,000 plus targets on Polycab in case you're looking at this calendar year. So you do see that 6.5% uptick is what we've seen for Polycab in the last 1 year. So you did see that crash in the beginning of the year. Slowly and gradually it improved, and it's only managed a single-digit return for investors. But in the new year, things could be much better is what Prashanth believes. Let's talk about the last Santa stock then. Prashanth, which one do you have as the last Santa stock that investors can look forward to?
I think for the last stock would be on my lens would be Lenskart. I think the way the stock has already performing post listing, And the Q2 earnings were also very much strong. It was surprised the market. I think we were expecting some kind of losses considering the last financial year pre-IPO database. I think they have surprised the market, and the way they are aggressively growing in terms of stores, in terms of delivery, in terms of reach to the customers. I think that will create a lot of buzz in the business top line as well as bottom line. So for me, this stock is expensive at this point of time, but again, a new age companies always behaves like this only. So try to take some kind of risk at this point of time. I think every dip can be an opportunity to buy Lenskart, but for me, it's a stock one should focus more on with a target of at least 550, which is a 10-12% return from the current levels. But overall, I have a long-term outlook on this.
Long-term outlook on Lenskart as well. So interestingly, you picked out a stock that was probably seen as an IPO with so much of debate that probably we've not seen with any other IPO in this entire year of 2025. Lenskart came in with a lot of criticism on the valuations front. The promoters' own purchase of the stock at a lower level was also being questioned, because just within 3 months you got the IPO at a much higher valuation. Although the stock started to perform after that knee-jerk reaction of launching on the IPO, slowly and gradually it found its feet and in fact continued to surge higher. Even today, Lenskart is trading about 4% higher at 487 as we speak right now. And Prashanth believes that all these new age companies that are big on tech, big on expansion, they have cracked the code when it comes to appealing to the customers at large. I mean, as a viewer, as a consumer also, Prashanth, when we see companies like Titan, which also come from a very big pedigree and probably have had a longer history in the eyewear space, for instance, Lenskart came as a disruptor. Even at any location, when you see a Titan store or other stores compared to Lenskart, you always see more crowd at Lenskart. So that's the kind of appeal that Lenskart has had generated. In fact, its global expansion is also now picking up pace as well. I had gone to Singapore and I did find a lot of Lenskart stores there which were garnering a lot of interest from people. So, you actually saw that, a new age company which is not only appealed to India but also globally, it is making a mark right there. Tell me, how would you look at Lenskart vis-a-vis the other companies that are also in the peer space?
I think Titan is the only neck-to-neck competitor for them. But again, Titan has been working very traditionally, slow mover. Again, they did not appeal people to get into their stores. And also, I think even beside my home, there is a store on Titan. But I never went to see about the Titan products and all. But Lenskart, again, it created a lot of buzz getting into the store, watching this, all the products and all. Post this IPO, I think the people have started recognizing the stock as a very well, recognizing the product as very strong with respect to their quality and all. I think the way they are expanding their stores, they are reaching to the customers and they are expanding their reach to have a easy buy for them at a very better prices. So quality works here, reach works here, and again the brand is also working. The digital first approach is the only way where others are missing at this point of time, and people are getting very much accustomed to go and visit the stock. When you visit a store, I think almost 50 to 60% there is a chance that you end up buying something, because there are a lot of offers, one-to-one frame free and pricing discounts and all. So that is the reason why people are getting into these stocks and getting that good in terms of quality. Plus this has been represented in the earnings also. So very positive on this stock for long term.
Very positive on Lenskart for the long term. All right, viewers, let's do a recap of all the 5 Santa stocks that Prashanth has given you as his own Christmas present to all of you viewers on Business Today Television that you could definitely be looking at to add to your portfolio for handsome returns. Let's start off with Reliance Industries. Now, Prashanth believes this can be bought at the current levels for a target price of 1,625 in the new year. The next one that he's talked about is Ather Energy. You can buy it around 700 odd levels for a target of 800 levels on Ather Energy. Let's also look at CEAT, which is the third stock that Prashanth has marked out from the auto ancillary space and the tire space. You can buy it at around the current levels with a target price of 4,400 to 4,600 rupees per share in the new calendar year. Polycab could also be looked at from the cables and the wires segment with the sound fundamentals and improving focus there with a target of 8,000 plus on Polycab that you could easily see in the new year. And from the recently listed stocks, he's chosen Lenskart Solutions as an IPO which has definitely, as a recent IPO and a company that has a long-term focus and should be definitely looked at for the long term. For the new year, you could definitely look at a target of 550, but Prashanth is positive on a longer horizon also to keep this stock in the portfolios as well. So those are the top 5 Santa stocks that we've discussed today. Thanks a lot then, Prashanth, for being with us on the show and helping all our viewers out identify these Santa stocks for their portfolios for the new year. Always a pleasure to host you with us.
Yeah, thank you very much.
All right, viewers, so there you have it, 26,126, a great number to look at on the Nifty, 161 points higher in trade. Sectorally, the action is pretty positive. We have all the sectors up into the green today, especially led by metals, ID, media stocks, oil and gas, infra. Even the broader markets are doing well. On the Nifty, we've discussed Shriram Finance for all of you. That continues with its upward run from the last week, 3.5% higher. We've discussed a lot of brokerage houses updates. We've also discussed the IT space, Bharti Hindalco, Wipro, Infosys. These are the stocks that are up and about as far as the markets are concerned. But what is not performing? We just have about 6-7 stocks that are really not performing today. Ultratech Cement, 0.5% down, and the losses are very minimal if you see. So broad-based buying kind of a spree can actually be seen this Monday. No more Monday blues is what we are seeing. After 3 consecutive weeks of losses, we are starting this week on a positive note. Remember, it's a truncated week. Thursday on account of Christmas will be a stock market holiday. But let's see how things pick up pace and progress throughout the course of this week as well. Thank you so much for being with us, and do stay tuned on to Business Today Television. Market coverage continues on the other side, and I will see you at daily calls to answer all your stock related queries now. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
From overnight global cues to live Dalal Street moves, we decode what matters